Good evening. Welcome to the Forex Pro Charts weekly trade results for the week that began May the 8th, 2011. I hope you traded with us this week. We had a really good week. Okay, let's look first at the GBP USD. And here we're looking at an hourly chart which covers a good part of the week. And so we see here that we had a dead support zone, and then price had moved through this zone and came down to this support zone here. And we had a 60-minute armpit with a fairly large risk, but we also had the weekly armpit running through the zone, which supported the bounce off of the 60-minute armpit. So we did post a trade alert for this trade, and we saw price come down early in the week. Sure enough, it went straight down to the 60-minute armpit. Actually, it spiked a little bit through, but you can see that the body of the candle was spot on the 60-minute armpit. Price spiked through almost to the weekly armpit, and then price bounced very, very nicely back up. Then it retraced a little bit back to the daily armpit, or actually a good amount back to the daily armpit, and then moved back up all the way to the to this dead zone and I'm sorry, I misspoke down here. This was the monthly armpit. This is the weekly armpit. And so price moved all the way up into this dead zone and then bounced off of the weekly armpit here that was intersecting also with the trend wall, and then moved all the way back down, came back down to the monthly armpit, bounced, back down, bounced, and then came back down, excuse me, went through the 5-minute armpit and is consolidating right at the bottom of this zone. Now, if you have been with us a little while and you're used to the zones and all of that, you're probably starting to pay attention a little bit more to these what we call left behind targets, and you can see here that price moved down and actually bounced right off of this left behind target and now is consolidating here. So let's talk about pips. We had price come down, bounce off the 60-minute armpit, and move up here for a total of 121 pips. Many of you probably would have closed your trade out here when you saw price begin to return or to retrace, or would have closed it out somewhere in this area as you saw price retracing. But again, if you've been with us for a long time, you probably closed out first lot, second lot, and then kept your third lot open at break even. So if you kept your third lot open at break even, then you never stopped out on your third lot and went all the way up here for a total gain of 218 pips before price did eventually come back down, move through the 60-minute armpit. At this point, you should have been completely stopped out, and then we've got this subsequent price action. So again, depending on exactly how you managed your trade, everybody should have been able to get their 20 pips. This was a very clean move up. You should have been able to get your 20 pips on your first lot at least. You should have been able to capture pips on your second lot. Some of you close out at the daily armpit. Some of you have arbitrary set numbers for limits for your first lot, second lot, and some of you go by the what you see on the charts and set your limits individually by the trades. So anyway, most people should have been able to capture pips on the first and second portions of their trade at least. Many of you will have had the third portion in and captured pips on all 3 portions of your trade. Like I said, the maximum number of pips to get on this trade was 218 pips. On this trade was the maximum. So that was one trade this week. Let's go ahead and take a look at another trade. You know what we're going to do? I should have started the week out with this. We're going to go back and look at the Euro GBP. Okay, so here we're going back and looking at the Euro GBP for the week. And actually, this was a trade we talked about the end of last week, and the trade result was actually posted last week. And as you can see, right at the very end of the week, if you remember, price had reached this 5-minute armpit right at the end of the week. So then so we weren't able to show show pips for this particular trade at the end of the week, because the trade had not even begun, really, much less completed. So watching this at the beginning of the week, we see where price opened higher, opened with a gap, and then moved all the way up beyond the daily armpit, and then did come back down, moved back down through the 60-minute armpit, and then back down through the zone, and then back up, and then back down. So obviously this zone is dead this week. But for the results for last week, at the very beginning of the week, when price moved up here, we saw a total gain of 63 pips, and then price moved here, and everybody should have stopped out, should have had their trade at break even and stopped out at this point. So traders should have been able to get at least the first two portions, first two lots of their trade, should have been able to see gains on that, and then the third portion of your trade would have stopped out at break even. So 63 pips was a very nice little gain on this trade, total potential pips on this trade. So let's take a look at another pair. Okay, let's take a look at the Euro USD, and we're looking here how early in the week price came down, bounced off the daily armpit, and then came back down, and this actually came within 7 pips of the 60-minute armpit. Then bounced up, came back down, not as close, up, and then all the way back down and through the 60-minute armpit down to the 5-minute armpit, bounced up from the 5-minute armpit a little bit, then back down, slightly back through the zone, and then back down through the zone again. So let's talk about this trade a little bit, and this is something that's that we talk about in our trade setup, and we've talked about it before, but I don't think we've talked about it in a little while. And if you've been to our website and looked at our trade setup and how to set up our trade, you'll see that we often recommend that many traders set up a cushion, an entry cushion of 5 to 10 pips right here, and then down at the lower below the end of the zone. And the reason for that is, if as you know, different brokers and different charting companies, their charts will be slightly different. So when you see on our charts the 60-minute armpit, and then where our candles come down and touch, yours may be, a few pips different. By the same token, when our charts come down, this, ours may not have reached it, but other candles will have reached it. So also, these zones and these lines, although we make every attempt to make them exactly accurate, it's very easy to actually move them on your chart by mistake, a pip or two, or just with the variances of the Forex market and Forex price action, many traders like to take a cushion. Now, some traders take that cushion and some traders don't, and that's a matter of personal preference. But what you need to know, and what we have talked about before, is that when price comes down and gets within that 10 pip cushion on the 60-minute armpit, for purposes of future returns to that armpit, when price hasn't left the zone and reestablished ratio, for purposes of future, like in this case where price moved up a little bit and then came back down, we did not take this trade. If we did, those of us who did not have a cushion here did not take this trade, because this came too close. This came too close. It was as if price had hit the 60-minute armpit. It was close enough that price virtually did hit the 60-minute armpit. And as you know, we do not take subsequent hits on the 60-minute armpit. As you see here, price moved down through the zone. So if you've reviewed the educational materials carefully, you will have seen that. If you've listened to us before, that we've brought that up different times in our analysis and so forth. But to repeat it again, when price comes this close to the 60-minute armpit, we consider that a hit, and then we do not take that trade. Now, although you can set your trades in advance and leave them for the week, this is one reason why we try to review our trades review our charts at least once a day or maybe twice a day, just depending on whatever your schedule is. But so that we can catch something like this, and if we see price action like this, then we went in and removed our entry order for this trade because price had already hit. Didn't, in some of our cases, with those of us who trade without a cushion, we didn't get in on this trade. It didn't come quite close enough to bring us in because we had our entry set right at the 60-minute armpit. For those that do place a cushion or maybe have a slightly different broker and spread or whatever, popped you in. So some traders were in this trade and others were not. So if you were in this trade, then when price moved up here, it moved up to 122 pips. Some of you would have closed out your trade there, but again, those of you who leave your third portion of your trade in, moving it to break even, would not have stopped that third portion of your trade out. It would have moved all the way up for a total gain of 169 pips. So this was also a very nice trade, again, if you take the cushion. Or if your spread, if your broker's spread popped you in on that particular trade, which probably happened for many of you as well. If you did not get in that trade and did not remove your entry order, or if you went ahead and waited and entered here, then you would not have had a gain and would have seen a loss on this particular trade. So that is a point that we wanted to make for traders who have not been with us a long time. And again, this is why we recommend that you demo for a while before you go live, so that you can see these different situations that come up and see how we handle them and what the different little idiosyncrasies of the system are. So that was the EU, and for many of our traders was a successful trade again. Let's take a look at the GJ. Okay, so this is the GBP JPY, and this trade happened at the end of the week. We had an alert posted on it even at the beginning of the week, and then reiterated that alert towards the end of the week. So price came down, messed around, flirted with the zone, and finally came back down, hit the zone, and then we see here where price spiked down from the daily armpit and hit the 60-minute armpit, which was commensurate with the weekly armpit as well. So hit that 60-minute armpit and then bounced up here and then came back down and moved down to the 5-minute armpit. So this gain was a gain of 92 pips. Again, a very nice little trade and a little gain, and would have been for first and second lots for many of you. And then, of course, you should have been at break even when price came back down here, and should have stopped you out with no loss on that third portion of your trade. Should have stopped you out at break even. So that was 92 pips. The last currency that we want to look at is the EJ, and let's go ahead and take a look at that. So here is the EJ, and we see the same thing. Price flirted with the zone, came back down, did not make it quite all the way to the 60-minute armpit, but this was still 25 or so pips. So came back down and then did come down and hit the 60-minute armpit, came down to the 5-minute armpit, spiked through, and then actually is like a pip below, or a couple of pips below the edge of the zone, and then came back up and actually achieved right up here, the top of this green candle, achieved a gain of 21 pips so far. And as you can see, this trade is by no means done. Now again, here's an example where price came down just a couple of pips below the end of the zone, and again, we recommend that you trade with a cushion. And so if you traded with a cushion, you may or may not have been taken out of this trade, depending on your broker's spread and exactly where you place your cushion. Again, we recommend between 5 and 10 pips. And if you trade the 5-minute armpit, this 5-minute armpit was less than 15 pips. You definitely should have had a cushion. And so hopefully many of you follow our recommendation to have a cushion, and are still in this trade. If not, you would be have stopped out with a loss if you had your stop loss placed right at the edge of the zone. Would have stopped you out. However, even if you stopped out, you should have been able to see nice pip gains overall on your trades for the week. And so we'd look at a total potential gain for this week of 482 pips. If you took a loss on both the EU and the EJ, if you did not trade with that cushion and did not and went ahead and got into the EU when it actually hit the 60-minute armpit, and if you did not trade with the cushion on the EJ, you still should have gained potential of 207 pips for the week. So still should have been a profitable week. And again, these are just some of the finer points of trading the Forex Pro Charts system that we encourage you to demo, to watch your analysis carefully, to listen to the videos and review the educational material, so that you can pick up some of these points and have them available to fine-tune your trading. So it was a very successful week. Like I said, a total potential of 482 pips. We hope that you captured a good many of them. For more information or to subscribe to our full analysis and charting services, where we analyze every week 10 major currency pair, you can go to our website, www.forexprocharts.com. You can get full analysis. You can get a week free demo where you access our educational material and our analysis, our historical analysis, and you can go ahead and see how you like the system. And also you can go to YouTube and look. We post the video of our results every week, and we also post a free analysis of one pair for the week. So www.forexprocharts.com. Have a good week trading, and we look forward to seeing you next week.